Hey everybody, welcome to our Wall Street winners for December the 6th. Let's dive right. Whoa, this is so fantastic. Please, I should just leave it on the screen for the next half hour. Okay, the market continues to remain under pressure. As I told you it would, I showed you the seasonality. I told you why it would come under pressure. But what I also told you was that it's not going to remain under pressure for very long. We've got Omicron, which is affecting the market. Inflation is infecting the market, that's right. But take a look at the purple predictor, remains above the price action, which shows that the smart money is not really getting very bearish here. Number two, I'll show you seasonality in a second. It also says we should be moving higher. And also, there's unsustainable levels of selling pressure. Let me show you all this. Here's the selling pressure. You can see we got up very, very high in the red box up there. And look at the blue arrows. They show every time we got up to that level over the last year, every single time, it was a low in the market. So this time's going to be a low in the market as well as that selling pressure starts to subside. What got hit the most was the Nasdaq. Look at Friday's price action on the Nasdaq, but then look at the purple predictor. Purple predictor's not making new lows. Price action is. Now, fully paid up members, remember this chart when we get back to the adrenaline. Okay, if you're not a fully paid up member, what's wrong with you? Okay, seasonality. Let's stop here. Seasonality, we had a buy signal, but then we got a sell signal. So we're no longer putting on extra large positions, okay? Recognize we're back to normal positions, and you can see I put the red line way up at the top of the chart there. So it's going to be hard for us to get a seasonal bull signal again for quite some time. The market's going to have to do a lot of work. Now, if we get a significant lower high than the one we see there, I may move it down. But for now, we're just in normal market conditions for quite some time. That's what the reality is here. Our seasonal pattern remains a bit choppy here, but late in the year, late in the month, we should get the Santa Claus rally. The purple line has done an excellent job so far this year. The market's up about 24% on the S&P. That's a really good year. All right, asset allocation. They're taking money out of stocks and putting it into bonds. People are basically panicking again about the new COVID variant. Now, as always, most viruses, what viruses do is they evolve to become more contagious and less dangerous. Viruses don't want to kill their host. That doesn't help them out evolutionarily. So look for this one to pass, be more contagious, but less dangerous. Fewer people will die as a result of this one. And then we've got 47% of all people on the earth have gotten at least one shot, and that includes some very poor countries. So basically, the COVID crisis should be over, but governments will seize on every new variant to lock down and attain more power for themselves. In addition, every new variant of COVID is going to cause the Fed to delay tapering monetary policy. They're going to say, oh, well, we have to keep monetary policy loose because these lockdowns are going to cause more slack in the labor market. And as a result, the Fed will remain looser longer. Now, the stock market risk Dicator, once again, they're moving out of consumer discretionary stocks into more stable stocks. So once again, we're seeing the Nasdaq get hit harder because, of course, it's more of a risky asset, but right now the market doesn't want risk. Global shares getting hurt even more than U.S. shares. Why? Because they're freaking out more about Omicron. I go around here in the United States. I'm in the U.S. right now. I'm back here from Dubai. And I've been all over Nevada and California so far on my trip back. And out in the rural areas, people really aren't wearing masks at all. In the urban areas, they're still wearing masks. But the point is that Americans are less freaked out and they're suffering from COVID fatigue. The whole world is suffering from COVID fatigue. So here in America, what are we doing? We're not wearing our masks anymore. But in Europe, they're rioting. And so you have the lockdowns that the government are reinstituting in many countries because of COVID. That's hurting the stock market. Then you've got riots in the street of tens of thousands of people in places like Scandinavia. Scandinavians don't riot, but they're rioting because they're tired of being locked down. Well, when you have riots, that means instability in countries, and instability is bad for stock markets. So that's hitting the European shares and global shares more than the American shares. Another big change here, the yield curve is getting flatter. Look at how we broke to new lows here in the last week. Long-term interest rates are coming down. Why? I got some bad news for you. They're coming down because they think that the economy is going to get weak. Therefore, inflation's not going to be a problem, and corporate profits are going to go down. It's still not to the point where I really want to say it's negative for the stock market, but listen to what I just said. Those are negative factors for the stock market. No, inflation coming down is a good thing for the stock market, but slower economy? Not really. It just depends on the Fed's response. Bonds skyrocketing up, as I told you that they would, and that's why the yield curve is flattening. Look for bonds to continue to do well. Our bond key factors, all of them are pointing down right now. All of them are saying we're going to see lower interest rates. That's the way to gotta play the market. We just look at the indicators. The indicators tell us what to do. We do what the market tells us to do. We make money. Got the plan? Okay. Dollar. Staggering a little bit because if bonds come down, yields come down, which makes the dollar less attractive. But then you'll notice it kind of strengthened a little bit because the market kind of said, well, yes, the dollar's not good, but everybody else is worse. All right, gold under pressure. Dollar staggers, but gold goes down. Gold's not thinking, the gold market's clearly not thinking that we're having inflation. The gold market is telling us that the inflation is going to be transitory, and that generous Jerome Powell is correct in his analysis of inflation. I'm not so sure because labor rates are starting to increase, and that is when inflation starts to get turbocharged. So I'm kind of disagreeing with the market, but I never fight the market. If the gold market's going down because it thinks that inflation is going to go down, I got to respect that. Our indicators, neutral. One bullish, one neutral, one bearish. Why bother trading gold when it's not a clear picture? Got to stay out for now. Let the Johnny One Notes lose money. We'll sit here and save our powder, and we'll jump into gold when it finally becomes more attractive. I told you crude oil would come down. I said it would get into the low 60s. I did expect it to take a little bit longer, but here we are. We're in the 60s, as I predicted to you when we were up around 80. Nobody else tells you how the crude oil market works better than I do. I'm the best. What can I say? I've been doing it for 50 years. Haven't been trading crude oil for 50 years, but I've been trading crude oil for 35 years. Okay, now we're going to stabilize. We're going to stabilize for maybe a week or so. We need to see what OPEC is going to do, OPEC Plus is going to do. We need to see what the economy is going to do. But we've hit our first objective of the low 60s. Now is time for us to stand aside and just watch the market for a week or two. Bitcoin coming under pressure. We told you can't be long. I didn't get short. I don't want to be short yet. But it came down hard on Friday. Broke to new lows. It's bearish. Do not be long Bitcoin right now, or you are foolishly losing money. Listen to your Uncle Courtney. So, right now, if you're anything, you should be short Bitcoin. Right now, I have no position. I think that there's some underlying fundamentals that may be bullish for Bitcoin, but the price action is crappy. Purple Predictor is starting to collapse. It's making me more bearish on Bitcoin every single day. But not going to get short quite yet. We'll wait just a little while longer. Okay, freebies, love having you here. I like sharing these insights with you. Then you can come up with your own trades to make money from them. But of course, if you were super cool, you would go to WSW 2021 to get my trades of how I'm making money from this, what my asset allocation is, where my entry points are, where my exit points are, and so on and so forth.